Bank of America topping Wall Street estimates on net interest income and trading revenue in particular. The stock is rising about 3.25% now this morning. Brian Moynihan, Bank of America Chair and CEO, joins us first on CNBC. Welcome, Brian. It's great to have you.
It's good to be here, Sarah. How are you doing?
I'm doing okay, trying to figure out what to read into all of this. I mean, you put up a good quarter, especially on, the trading like other banks and net interest income. How much should we read into this healthy snapshot, given the enormous uncertainty we face about what comes next?
Well, I think, Sarah, as we laid out in our earnings presentation, the analysts just a short time ago, we basically laid out our first quarter 2025 results, which was 18% EPS growth, revenue growth, modest expense growth, good credit quality, delinquencies down, charge-offs down, et cetera, and loan growth and deposit growth, showing that the economy is still growing and our consumers are still spending. But on the other hand, we said, here's how we're positioned if any of these things that we all are talking about and you're talking about every day could come true. Differences in policies across multiple dimensions, what that could do to affect business spending and capital formation. And all those things are out there. But in the current environment, we try to draw a bright line saying, hey, the first quarter of 25 was another good quarter for Bank of America.
How much has the trade war impacted the results so far? And if not, when do you expect it to do so?
Well, I think the tariffs and trade haven't impacted our results in the near term because, remember, it was April 2nd, so there were modest tariffs before then. I think what you're seeing is our economists at Bank of America Securities, as well as economists around the street, are lowering their growth expectations and increasing their expectation that there could be a recession up in, from 20% to 40% or whatever the numbers are. And are increasing unemployment levels up a bit. And as you look at all that, how a bank thinks about that, that goes through our reserving methodology for our loan book. And what we told people is if you take our reserves and our imprecision reserves, our judgmental reserves, and all the conservatives we throw in, we're sort of reserved at a 6% implied unemployment rate, which is far where we are now and above where most people think it will get. So the banks have done a lot, and our bank has done a lot to position ourselves with capital, liquidity, credit quality, multifarious portfolios and for times of stress, of which we haven't really seen other than the pandemic for a long time, and we're prepared for that. And yet you're not seeing it reflected in the current numbers. You're reflected more in how we're thinking about credit and provisions going forward.
What do you hear, Brian, from the CEOs you talk to, so many, small, medium, large, about investment and hiring plans given the new tariffs?
Well, I think it's not the tariffs are one aspect of it. You have the immigration policy and the ability to get workers. You have the tariffs. You have the tax bill, which is moving through Congress. There'll be a lot of discussion as it moves towards a final resolution between the two plans and ultimately what they'll get through. And then you've got the deregulation impact across all industries. And I think each of those are hard to figure out, and all of them together, all moving at once, are even harder to figure out. So the new administration came in with ready to go compared to the first Trump administration. They put a lot of stuff on the table. They're pursuing all that. And while we talk a lot about tariffs, all these other aspects are going on, too. And the average business owner is trying to figure it out. And that's causing them probably to be a little slower in making decisions on hiring or capital investment until they figure out the path forward. Now, in a company like ours, we've got, tens and hundreds of people who spend all their time thinking about that. We've got a research team, which is a great team that spends all their time thinking about that. But if I saw a lot of mid-sized companies and smaller companies last week. If I were one of them, I'm sitting there saying this is hard to figure out. So they're being a little more conservative. You're just not seeing it reflect in their current asset quality or anything else at this point.
Well, have you seen any notable increases in companies tapping credit lines for precautionary reasons?
We have not. So if you go back before the pandemic, the average draw rate of middle market credit lines was, say, 40% to make it simple. That fell to 35%. It's run around 36%. So you're not seeing people like they did during the first stage of the pandemic 5 years ago. About this time, we saw $70 billion in commercial lending come through in a quarter, which is way outsized compared to what we see. We grew loans 4% year over year. Think of that as $40 billion over a whole year, not $70 billion in a month. And so we haven't seen anything like that. They're calm. They're making money, but they are worried about how all this works and how it could reflect, the changes in supply chain, the changes in cost. Can they pass that through to the customers? But the other thing we have to remember is the U.S. economy is dominated by services, too. And those are a little bit different. And one of the worries I have about tariff policy and stuff is when do the services get dragged into it on an international scale? But in the U.S., a lot of services side consumption has been strong. And the last thing I'd say is we told people, and we've talked about it many times, Sarah, is our consumers in the first quarter of 25 moved 4% plus more money out of their accounts than they did in the first quarter of 24. And for the first part of April, using a 4-week average just to make sure we don't have bumps, and it's running about 5%. So the consumers are still spending money despite the polls that say they're going to stop. They have not stopped yet.